Welcome to the 2023 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me on this July 26th Wednesday Hump Day edition. Today, we're just going to be talking about prices that are still surging in spite of the rate increase today that we've seen by the Federal Reserve. Now, this is not an unexpected rate increase. Many expect this to be the last rate hike by the Jerome Powell, chairman, and the Federal Reserve. However, that may not be the case. It may be two more rate hikes in effect as we continue on. So things, as we head into the third quarter of this year, it's going to be very interesting to see how they balance the prices going up and the need for this economy to grow at the same time. So looking back at it, we have gasoline prices are spiking, and this can pose a major problem for Powell and the Fed, according to CNNBusiness.com. Gasoline prices are topping out at $3.78 a gallon for the averages across the nation here. Regular gasoline is at a 3-month high of $3.69 today, according to AAA. That's up 5 cents from Tuesday. This is making the biggest one-day increase since June 2022. And so these increases are going to be continuing. I believe as we get to late summer, it's possible that some places outside of California are going to touch $4, close to $3.95 a gallon for regular unleaded. And so these spikes are going to be something that's going to be continue to be a problem. Higher commodity prices could mean higher rates, and a spike, quote, in commodity prices could reignite a run-up in interest rates and restart the battle between oil and money. So they've already hiked rates for the 11th time since March 2022. Again, lifting it to its highest level in 22 years. Of course, they did the 20.25% basis point rate hike that everybody was already anticipating, of course. But now we have the ongoing situation in Ukraine with the grain prices and hurricanes and heat waves is another toll that hasn't came into play yet. If we get a hurricane in late August or September, then that's going to affect gas prices as well. So the Fed, quote, according to MarketWatch.com, no longer sees a recession. Remember, they were saying that we were going to have a 70% chance of a recession, a mild recession, a soft landing, quote unquote. Now they say that, according to this article, the Market Watch, that they no longer see a recession. However, you and I know that things are differently. It's just it takes time for things to propagate. And he mentioned that Chairman Jerome Powell mentioned that today, that it takes time for things to go through this 15, 16, 18 trillion dollar economy. And remember, they pumped a lot of money in, so you could make a policy change today, but you won't see the effects of that till 1, 2, 3 years down the road. Hence the slowness. But anyway, the soft landing is on the table. So we still don't know what kind of landing we're going to see here, but we do know that a recession longer than the 2008-2009 recession is still on the table, in my opinion. So banks are aggressively tightening. If you've known, some people are saying that their credit cards limits have been dropped, 1K, 5K. Some other people are saying that physical bank branches are closing down in their local areas. They're reporting in the West and Midwest as well. And so these things are showing that the banks are tightening their credits. Maybe not a financial advisor, I'm not a financial planner, but maybe a time to start getting into bonds, T-bonds, treasury bills, online high yield savings accounts, things of that nature, to take advantage of these rates while it continues to go up. And so the Fed forecasts 2 more 25 basis point basis rate hikes this year, and so this is going to be put a lot of pressure on this economy. Now, this is on top of mortgage rates that has been going up to 7.2%, 7.3%, 30-year fixed mortgages. That's going to put pressure on this economy too. The housing and the credit bubbles have still yet to deflate, and that's what's keeping the air in this economy. Now, the Dow Jones, quote unquote, according to CNBC.com, posted its best weekly winning streak since the 1980s, 43 years ago. Why does it keep going higher? Well, a couple of things. The money printing and the speculation that the Fed will pivot and stop hiking rates, and that they will just flatline and then start lowering rates. You know what I'm saying? So that's why the rates are going up. Dow Jones rose for a 13th straight day, matching its longest winning streak since 1987. But remember, ladies and gentlemen, the Dow Jones, the stock market is not the real economy. And second of all, you can have a stock market going to 40,000, 50,000. Venezuela had it, Turkey had it, Greece had it, Sri Lanka had it, Zimbabwe had it. Everybody had a stock market going to the moon and beyond. But look at their economy. Look at the day-to-day conditions that they were dealing with. So this is actually a bad sign to me. You can have an economy with the stock market going to the moon and the people on the street not eating, having gas shortages, fuel queue lines. A number of things could go wrong. Even though the stock market appears to be healthy, you have to look underneath the hood, underneath the surface. There's cavity, there's plaque, there's things that are taking these the big cogs of the economy out. So continue to prepare, guys. Continue to focus, and you will be successful if you focus on the basics. before the basics take care of you. Assets, hard assets, food, water, security, medicine, clothing, things of nature that are going to last through the test of time. Be blessed. I'll talk to you very soon later on after the next earnings report tomorrow and Thursday and jobs report.